Hey guys, good afternoon. My name is Josh, and what I'm here to do today is show you guys my Euro New Zealand analysis and the trades I took yesterday. Now, initially I was stopped out actually on the first trade I took by 2 pips, but that's my own fault. I didn't wait long enough, and I accepted the loss, understood why it happened. So when I was stopped out, I just set the trade up with a tighter stop loss. But with a larger lot size. So I still kept the same risk to reward ratio, but because of it being a smaller stop loss, I was able to capitalize on more profits toward the downside when we actually got into profit. So yeah, I risked 2% on the first trade and lost it, but then I made back 6% on the following trade. Something I want to share with you guys is just how easy it is for the market to create money and why it needs its participants. E.g., this black line here, now that's on the 16085, so just as we break 168, new liquidity comes into the market. There would have been a lot of buy stop orders triggered, so people would have placed their stops back at 1677 minimum, I'd say. So if they enter on the break of 168 as a clean number, the average retail trader is going to have a 30 pip stop loss. So if what I did was banked on that, really, as you can see here, ascending trend line on that, but ultimately, especially around this price level, if I zoom out, I'll go to the 4 hour here on the top right. I have filmed this video a few times, but due to technical difficulties it's not worked, and it does need to be 10 minutes long for it to go on IGTV, so really sorry if I'm blitzing through. This yellow zone here, it's trap liquidity. I call this the liquidity zone, and it ranges between the 8th value up to the 20th value. So that 40 pip range there, to me, is make or break. And as you can see today, we've sawn through that area and we're having a clean break once we broke out of here. Now this 4 hour candle did only start 20 minutes ago at 2 o'clock. So yeah, I am filming this in the afternoon, so live action will be seen on these charts. But up until that, when I took this trade, my thoughts behind it was that, let me have a drink, it's going to get interesting. My thoughts were that London session's coming to an end. The market was very slow. It's been choppy and consolidating for the past few months. But with the market closing, if it does make a break of 1.68, that will set off buy orders. And we will come back down just to stop people out, make any daily candles and whatnot. And as you can see, we ranged, and it's the really, really small things in the market what make all the difference. E.g. this here, this 4 hour candle on the top right. You can see here we've just broke out of the black zone, and triggered off more liquidity for more buys, which is fair enough. You know, the market's pushing up. We've had a great clean breakout this morning. If we continue it throughout this afternoon, then that's even better. But initially, if it's going to break out at 2, by the time we come back down to London, it's going to retest down here, because people would have anticipated that it would have broke out through Sydney, but it didn't. And now we came back down here, 6 a.m, so just before London. And once again, we've got another wick, guys. And that said, we came out of this golden zone just here, collected liquidity below 1678. So that's either going to hit stop losses and in the same way anticipate breakouts. You need to be so careful when you're in the market in these conditions, because 2 pips to either side can trigger orders, and that is how people are accumulating a lot of money in the market. They're not swing trading for 70 pips plus, you know what I mean? They're literally capitalizing off the 20-30 pips people are using for their stop losses. And when you mix that with the correct risk to reward ratio, you can really coop in some good returns. So yeah, that was the idea behind the sell. I didn't intend to buy, and especially I didn't intend to buy last night, because like I said, the London session was done, liquidity was low. It's just going to be a fake out to trigger buy orders, collect their money when we hit their stops, and then from then, you know, it's hard to say. But if we take a look at what's been happening, we've been making higher highs gradually. So we broke out of the 2 zone at 2 in the morning and hit the 3, and now we're pushing up, but maybe I think when we get to 230, we might just see some downside, something like this, just back down here. So where's my brush? Yeah, down here, under there, back, and shoot back down. I do think that we will revisit 1668. So like I said, that's back into the 8 region. If I get the 8 and I get the 2, you will see that there's, I wouldn't say liquidity because it's not really much of a big move to call it the next liquidity zone, but there will definitely be money waiting, people observing this area of the market. So from the 8 to the 20. Now that is on the 15. If I go drop it to the 4 hour, you'll see that the zone I'm talking about here on the left, half that was a huge candle then, could definitely come back into play. So it's just a case of how it's going to play out, but with that big move through there and closing out all of the malarkey we've seen, e.g. we had a head and shoulders. Let me just find my brush tool again. Left shoulder, head, it's drawing so bad, right shoulder. So if you're going to trade that head and shoulders there, initially you're going to place your stop just here. And if I do zoom out, you'll see for this whole move, go to the 8 hour, that we are resting on the, we've hit the 0.5 fib. We might push to the 618, but if we do reverse from here, that wouldn't surprise me, because this black line here on the left is acting as the support and resistance flip, and it's always best to trade off the first touch, which I'm doing now, and which has really been anticipated around this 2 level. So, but now we are in the 5s, we're nearly at 1686, so I don't want to hold on to that theory for too long, but depending on New York's close today and what we'll see over the next hour could determine, it is the last week of the month, and I do believe that market manipulation could be quite heavy, especially with the last financial quarter coming up. We usually in the last week or the first week see a push to a key area, so the monthly support and resistance and candle formation has been made, then that means we can quickly shoot off. Everything in the market happens for a reason. I don't think price levels tend to just happen like everything's mapped out. So we've got the last financial quarter coming up. There could just be some reports. I know that Jimmy Bullard spoke the other day, and that had a good effect for the crypto space and the currency market. Yeah, it was showing dollar weakness, but it's just down to the dollar if it wants to stay weak. And like I said, with the last quarter coming up, we can expect to move. And if you see here, the area I've highlighted before I've even opened it, it's aligned with the 8-day moving average. And once again, we're in that same zone between 8 and 2. Guys, it's such an important zone, what it's trying to say. I don't really use too many indicators. It's more just having a feel for the market and knowing the assets you're trading. Every pair will like to fluctuate around certain zones. You can see here on the last month's candle, we're between the 5 and the 6 fib. So yeah, that's the quick analysis on Euro New Zealand, and as to why I took those short trades. The main things I can take away from it was to be against the liquidity, the time. If it was prime market time, I don't think I would have took that, but in my head I just did feel like it's coming to the end of the session. If we break above and trigger some buy stops, we're only going to liquidate them later throughout the day. There's about 8 hours left in the day, and then from tomorrow, today I've not been in the market, I've just been observing this move, checking it out on all the time frames. But yeah, I hope you enjoyed that, guys. I do hope to be posting more, and I'll catch you guys soon.